All right, let's go ahead and get started here. I'm going to share my screen and we'll dive right into the material I prepared for you guys today. All right, we're going to go ahead and get started. I just shared my screen. Give me a yes or a thumbs up in the chat if you guys can see the screen. Should be able to see my entire screen. Sweet. Yeah, I'm just going to be presenting this material for you guys today. We'll do some Q&A afterwards. I see a couple of you requesting to speak, but we're just going to use the chat feature in this stage. If you guys have questions throughout, feel free to type in there. But yeah, while we're getting started, let me know where you guys are joining from. Curious to see where everyone's coming in from. Roll there, I did take Spanish 3, but we're going to be doing this stream in English today. Austria. Where's everyone from? Let's see. Canada, Minnesota, Israel. Nice. We've got people all over the place. My dad was in the Air Force, so I lived like all over the place growing up. I was in England for a while, Germany. I've been in the U.S. most of my kind of later life. I'm currently in Colorado in the States. UK, Swiss. Nice. Awesome. Well, yeah, great to have you all join. We're going to go ahead and start getting into the materials here. And so let me get this presented. And hoping you guys can still see. Let me know if you can see the materials and my face. You should be able to see both. Just give me a yes or a thumbs up in chat. Just double checking. All right, sounds like we're good. So yeah, doing an education session today. We're not going to be doing any live backtesting today. We'll start those up kind of next week again. But today I'm going to be going over some really important education material for you guys about backtesting, specifically kind of my process that I've developed over the last 11, 12 months that's worked really well for me to develop and optimize trading edges. And then also we're going to talk about some key components that I think are helpful for any trading strategy, whether it's something you develop yourself or something you pick up from others and you're trying to make it like a mechanical strategy that you can backtest and know all the rule sets. And then at the end we'll have a little Q&A as well. So with that, let's go ahead and jump in. So my backtesting playbook, I basically have several different kind of steps that I go through. And Sunny, yeah, we're recording this and it should be shared a bit later this week. But so yeah, to go through these kind of steps, the first thing that I would recommend is to honestly figure out what time of day you can actually consistently like be in front of the chart and trade yourself. It doesn't really make sense to test a strategy in a time zone or time period that's you're sleeping, or it's 3 a.m. or just something that you're not going to be able to consistently trade. If you're obviously working, you've got to kind of figure out working around that. So the step one is figuring out kind of what time of day you can consistently trade, and I really recommend trying to line one of those up with kind of one of the 3 core sessions that we see each day during the week at least. So New York sessions are obviously 9:30 Eastern, 1:30 UTC, and you can trade the first kind of 3 hours or you can trade the entire session. Asia sessions a little later for me in the US, 8 p.m. Eastern, midnight UTC, but some of you in like Australia or overseas, that could work well for you. London session is too early for me. It's about 1 a.m. my time. I'm 2 hours before Eastern. But for a lot of you in Europe, trading forex pairs, gold, London session can be really great for that. And then really after you figure out kind of when you can consistently trade, the next best thing is to find a strategy and start backtesting it during that time. And there's tons of strategies out there, whether it's an ICT concept, pattern recognition strategy like the one I shared earlier this week, or something you find online. There's lots of different strategies, and we'll be backtesting some of them together as well. So you're welcome to kind of pick up strategies that we do together. But you need to find a strategy that you can backtest specifically during the time that you're going to be available to trade. And this includes both the time frame, so are you backtesting the 5-minute time frame, 15-minute, 1 hour, etc., and what pairs are you testing? Because some strategies might work well on certain pairs and time frames, others might not. But yeah, just to answer a quick question, if you guys are having any audio issues within Discord, make sure to go in the settings into your voice and video, and you might need to change up the output device. He probably can't hear me. If someone could just type that in the chat for him, that'd be great. But yeah, hopefully the rest of you that can hear me fine. The next step after you've kind of figured out when you can trade and what you're going to start doing backtesting a strategy is doing kind of an initial run through. And generally after about 20 to 30 trades, you should at least have kind of a good idea if the strategy is like profitable or not. If it's giving you guys a decent, equity curve with the wins outpacing the losses and you're starting to see some profits come in, then it's encouraging to know you should be able to continue. But if it's, only losing, money and, the win rate's terrible, 30% or lower, then it probably just isn't a good strategy for that pair for that time frame. Unless if it's a strategy that someone else has confirmed should work well, then maybe you can ask them some questions and find out, why does my backtest not line up with kind of what you said. It could be you're testing it in a different session than they did, or a different time frame, or different pairs, or maybe they just didn't give you the right information. But assuming you have the initial results are good, then the next step is to get basically kind of 6 months to 1 year trade sample size. And I really like to go for like 100 to 200 trade sample size for kind of the initial run through. So let me know anytime if there's any questions as I go through these. Feel free to reach out in the chat. Step 4, this is something that I think people don't do enough, that I really recommend, is like auditing your backtest. Obviously, when you first start, you might not exactly know the rules, and you might, miss some trades or not follow the specific rules. But I think going back and auditing the backtest that you've done to make sure you stuck to all the rules of the strategy, you didn't miss any trades, you didn't, see that, oh, this trade would have worked out, but it wasn't exactly the rules. Oftentimes you'll have kind of a bias in backtesting and try to kind of sneak in trades that should have been losses or weren't proper setups. So I think auditing the backtest is really helpful to kind of make sure everything was, you're getting basically correct data at that point. So within FX Replay specifically, this is, generally I'll kind of scroll back through the trades and kind of make sure, okay, did each of these trades meet all my entry parameters and everything? Were there any trades I missed? And then if after making those adjustments, I'll kind of replay back through, re-record the trades to make sure I have the good data. And then this fifth step is something that I'm really excited to go over with you guys in future weeks. It's essentially an optimization process where I will kind of download the export from FX Replay to Excel or Google Sheets, and then I'll have in my head, like when I'm doing these backtests, all kinds of ideas. I notice this little thing here and there that, certain trades I could maybe tighten up my stop loss a little bit, or man, like I'm, taking my profits way too early. A lot of these trades are running, so maybe I could, extend my take profit or do some kind of trailing stop loss. And the whole goal with the optimizations is basically seeing from each of these individual tweaks, does it improve the profitability more than it reduces the win rate, or vice versa? If you want to test, maybe I should apply filters to certain trades. So maybe you're taking less trades. Does it improve the win rate more than it reduces profitability? And basically, when you make those comparisons, you'll be able to find multiple, 10, 20, 30% little bumps in your strategy that'll really help it outperform a lot better over time compared to the initial model that you make. So in future weeks, I'm gonna basically make a template for you guys that you'll be able to download the FX Replay exports into kind of a spreadsheet, Excel or Google Sheets, and then we'll walk through doing some optimizations together so you guys can see what's going on. And I do see a couple of questions in chat that are kind of general. We'll do some Q&A at the end, but if it's not specific to the material I'm going over right now, I'll kind of save that for a little bit later. But yeah, the optimizations are really cool. I do them a lot, and I think it's really important to really try to find those slight little improvements to your edge that can really add up over time. And then the last thing is kind of comparing your backtest with a recent forward test. So, backtesting, you can obviously go as far back as you want. FX Replay, you can go back, 10 plus years in some cases. But the forward test is really like a kind of gut check. Like, is this actually working well in the current environment? And that could be the most recent 1 to 3 months. If your strategy is, a higher time frame, maybe you want to get, 6 months or 1 year of the most recent data. But the whole point is that you want to see, how does your backtest compare to the most recent forward test in live environment? And you want to see like reasonability, like is the win rate about the same, or is the P&L per month or per week like about the same? And if it is, then that should give you some confidence that, okay, this strategy should be pretty good to go in a live environment. And yeah, totally agree. Ollie, I saw you in chat. You definitely have to backtest to know the strategy is profitable. Backtesting helps you, understand if you are actually trading an edge or not, and then also helps you build the reps to, get ready to execute in a live environment. So that's kind of my backtesting playbook. Let me know in the chat. Is there any questions about either of these, any of these 6 kind of steps that I went over here? All right. So with that, we'll dive into the next section of this presentation, key components for trading strategies. And just as a premise, I want to kind of clarify, my goal today, at least, is to give you guys kind of a general framework for trading strategies. I'm sure there's going to be a lot of questions about, what do you mean with this technical analysis term or this technical analysis term? And I don't want to spend too much time really getting specific on what all these things are. I definitely recommend, if there's a term you don't recommend, either, Googling it, researching it yourself, asking in the various chats we have, the backtesting and trading chats. But for this specific presentation, I really want to try and give you guys the general framework for a lot of these things. And if there's anything you're unfamiliar with, I definitely, ask in the chat, research it. There's a lot of technical analysis terms and things that, I've learned over the years, and, we just don't have time to go over all of it today. But in general, I would say that there's 2 kind of core things to any quality trading model. You need some sort of initial condition and specific entry models after that's present. So initial condition, without going into the examples yet, is essentially generally when this thing happens, more often than not, there's an outcome that happens, more than 50% of the time or something. So the model I shared with you guys earlier this week was based on rising and falling wedges, and statistically, once price breaks, up out of a rising or falling wedge and down from a rising wedge, it kind of continues in that direction. So that's kind of my initial condition, is a retail pattern, I guess, for that model. There's also a lot of other common initial conditions, such as liquidity sweeps, which could be, previous Asia or London session highs and lows, time-based liquidity, which is previous daily highs, previous weekly highs, previous monthly highs and lows, all things like that. Trendline liquidity, there's a lot of liquidity sweeps that people will use as kind of an initial condition for reversal strategies. So, maybe it sweeps that initial level, and I have a graphic over here on the left, maybe it sweeps a key liquidity level, and then you're looking for an entry model for a reversal after that. Another initial condition you'll often see are market structure shifts, also called kind of change of characters. And a graphic I have down here really just shows you very simply, it's kind of a change in the trend. So in this case, we have very clear downtrend with lower lows and lower highs. And then we have a change of character here with a higher high, which leads to a reversal. So oftentimes an initial condition for a strategy will be a market structure shift. And then you're looking for a specific entry model after that happens. With ranging markets, you can, if price is consolidating within a specific range that you've defined, you can look for kind of breakouts of that range, or, deviations outside of it and then back into it. That could be an initial condition. I've seen strategies where people just look for impulsive moves, like I'm looking for a 5%, down move on crypto, or, a 1% move on indices, or 5 red candles in a row on this time frame. Basically an impulsive move that you're looking for a kind of bounce, or, reversion to the mean. And so oftentimes an kind of impulsive move that's specifically defined can be an initial condition. And then divergences are also another one that's, whether that's, price divergences with, price making higher highs and, the RSI or something making lower highs, or SMT divergence, which is an ICT concept. Divergences are also a common initial condition that you'll see. So the whole premise is the initial condition kind of shows you until this happens, like I'm not really even like looking for a trade. So you need the initial condition to be present before you look for your entry models. Speaking of entry models, this is basically like you're very specific. Okay, I have my initial condition. Now I'm looking for like exactly where to enter and like how to actually execute a trade once that initial condition is present. And honestly, probably the single most common entry model that you will see with any strategy is some sort of limit order retest of a key support and resistance level. And this can look a lot of different ways. I have a couple different graphics here. It could be a retrace into a fair value gap for a continuation to the upside, a retrace into an order block before continuation. It could be a retest of various support and resistance levels, whether it's a horizontal resistance, a trendline resistance, a pattern that's, broken out and retested, whether, there's all kinds of different retests you can have. But the really nice thing about these is it generally gives you pretty good risk to reward, because you're not entering, after, a pretty explosive move. You're kind of looking for a little pullback and continuation. But there's all kinds of different retest entries that you guys can look for based on all kinds of different models, whether it's trend lines and supports and resistances. The other, probably second most common entry model that I'll see is trying to enter on like impulsive breakouts. So for those of you that were able to join earlier this week, I had both of these. I had a limit order retest for the kind of rising and falling wedges, but I also had a breakout entry model that I defined where if it was an early New York session and we got a kind of impulsive breakout of the patterns, then I would just kind of market enter based on kind of the specific candle structures. So this is generally kind of, you have to backtest and identify, okay, I'm missing these moves. A lot of times, they just take off without the retest. Then it might be worth considering adding a kind of second entry model that's based on breakouts, whether that's specific candles that you're looking for or specific, if it's early session or something, and you've noticed that it kind of just takes off when that happens. But then, speaking of candlesticks, I'll get my face out of the way. There's all kinds of different candlestick patterns that people can look for as well for reversals or continuations. I use, most commonly like engulfing candles for kind of a move, in continuation move in that direction. If you're looking for reversals, maybe you want to see kind of one of these reversal candlestick patterns before kind of your shift in the other direction. But the whole point of these entry models is you want it to be very specific on when exactly, like black and white, no subjectivity, when am I going to enter the trade, and whether that's based on a kind of pullback, a retest of a level, and that's where I'm going to enter, or if it's a breakout and I'm going to kind of market enter at that point. But really the whole thing, when you put these together with the initial condition, once this has happened, okay, I'm actually looking for a trade now, and the specific entry models, this kind of helps you clearly define like when I should actually enter a trade. Otherwise, there's a lot of just subjectivity, discretionary, should I enter this trade or not? And I think it's a lot better to have these really clearly defined, so you know exactly like when you should and when you shouldn't enter a trade. Some additional components outside of the put my face back down here. Outside of the initial condition and entry models, obviously you want to have a very clearly defined stop loss. Most commonly, you can use obviously recent highs and lows. You have the options to use kind of the extreme wick highs and lows or the bodies of those candles. That's kind of something you can test with the optimizations. Term I like to use a lot when I do my back test is like, one line of defense or 2 lines of defense after my entry. And this essentially means like, say that I'm doing a retest and, price is coming up back to my level where I'm going to short. I will look for, maybe 1 or 2 lines of defense above that entry point, whether it's a fair value gap or an order block or a high or low, that, something that tells me, okay, what else could kind of help price go in my favor if it does go a little bit past my entry, and I'll put my stop kind of past that. And this is something, again, you can kind of optimize what the best number is for your strategy. I've had some strategies where I'll use 2 lines of defense, some where I'll just do 1. But you can also look for, fib retracement levels, or, some people use standard deviation measurements for kind of where their stop loss is, especially if it's like based on a range breakout or something like that. Take profit levels, just the same. You want to have that clearly defined, whether that's a liquidity level you're targeting, maybe it's just a fixed, I want to target 3R per trade or 2R per trade. You could look for kind of support and resistance levels against the trade direction. So oftentimes I'll backtest and find out, okay, this model like generally will give me 2R or 3R, and I'll look for kind of a level on the chart, fair value gap, order block, high or low, that gives me kind of more than 2R or more than 3R depending on the strategy. You can also use, fib retracement or extension levels, standard deviation projections, measured moves for price patterns. I went over that in my stream earlier this week, but the whole thing is you want to have the stop loss and the take profit clearly defined so that you know, again, when to enter, when to exit, whether it's a win or a loss. And then in general, there's kind of just, basic parameters you need for any strategy. Obviously, which pairs are you going to be trading, which time frames are you going to be trading, whether it's, 1 minute, 5 minute, 15 minute, etc. Are you using multiple time frames for confluences? And what sessions are you trading? New York, London, and Asia. And just to touch on the sessions real briefly, because this is a really common mistake I see a lot of beginners use, is trying to trade too many sessions. Often, especially with crypto or gold or something that futures as well, that you can trade pretty much any session. Just because you can trade those sessions doesn't mean you should. And I think it's really important to consider, number one, like what is the best for me, like long term with sustainability, like when I can actually be in the charts and take these trades. Is my girlfriend gonna hate me if I keep getting up at 3 a.m. or is that just gonna, if you're not well rested, it's gonna impact your trading poorly. So number one, like when can you actually consistently and healthily like be in front of the charts, and then also if you can trade 2 sessions, maybe backtest both of them and see which one's better and kind of decide to set your schedule around that. So yeah, I think these are kind of all of the key components that I wanted to go over with you guys. So I'll take a kind of chance now to open up some questions. If you guys have questions about this specific material, we can also have some time if there's other questions and just in general, happy to take some time. And then at the end, I want to try and share with you guys, there's some feedback that I've requested from you guys for future backtesting sessions. So feel free to type in the chat what kind of questions you guys have about all this material. So Duke Lionheart asked, how much time do you spend backtesting per week? So it does depend like what my focus is at that point in time. Am I actively like developing a model that I want to like finish and trade like soon, or for a documentation thing with a group or a presentation, something like that, then obviously I'll put in a little bit more time to expedite that over time. But in general, I would say over the last year I've spent most of my time, obviously I trade personally New York session in the morning, so there were certain strategies that I traded that I could kind of set some alerts, and until those initial conditions were triggered, I wasn't really watching the charts that closely, so I could backtest while I was kind of trading. But currently I'm trading some strategies on like the 5-minute time frame, and I really have to like lock in when those trades are showing up. So I really don't backtest at all when I'm trading right now, and I'll do it either later in the day or on the weekends. But I would say when I'm actively developing and optimizing a model, it's pretty common for me to spend 4 to 10 hours a week backtesting. I've put in over like 400 hours in the last year, so I've spent a lot of time in FX Replay developing, optimizing strategies. If a friend has a strategy they want to help out with it, removing some subjectivity, I'll kind of test that as well. So I think Queen, sorry, I'm not pronounce your name exactly, but you said, what percentage should a strategy make per year? So when you think about trading, there's multiple ways to kind of go about this question, because it depends if you're trading live funds or prop firm funds. Obviously, with prop firms, there's a lot of scalability where, 10% a year on $5 million is like pretty good. Like, but 10% on 10 grand or a smaller live account isn't really that much. So it kind of depends what you plan to trade and how much scalability you have access to. So crypto, for example, you generally have less scalability than futures or CFDs, and with prop firms, I think it's pretty common if you have like a strategy that gives you anywhere between like 4 to 6 R per month. That's, plenty for you to start slowly building up an account over time. Obviously, the more profitable the strategy, the more forgiving it is if you miss some wins and stuff. But in general, I would say if you can find strategies that are at least giving you, 4 to 5 R a month on average, even, taking into account some missed trades and stuff like that, then I think that's a great starting point. I generally will recommend people to look for strategies that have at least like 2 to 1 risk to reward, so the wins are at least twice as big as the losses, and hopefully at least a 50% win rate, or close to that. That should give you a pretty good equity curve. What other questions do you guys have? So Red King asked, I find myself jumping into trades that I should not while backtesting. How do you keep yourself accountable while backtesting and help stick to your rules? Yeah, totally makes sense. So I think it's really common, like especially obviously with backtesting, you're kind of cheating, right? You can kind of sometimes see what happens before you take the trade. So it's human nature. It's very common to like for your first run through to be a little like biased, I guess, and maybe a little bit better than it should be, so that's really why I think the step in my backtesting playbook of auditing your backtest, it's going to help you a lot, because you'll be able to go through and say, okay, I shouldn't have taken this trade, or I missed this trade, or this trade didn't really follow my rule, it should have been a loss, I bumped my stop loss a little farther than I should have. But in general, it's really just practice. Like with any model, it's going to take you time to really build the reps to like know what to look for and when to actually like place those trades. So it is just a matter of like building those repetitions as well, so you can like better see those things. But that's one of the best things about backtesting is it's kind of like practice for an athlete, right? Like they don't learn how to shoot those long 3-pointers or do all those agility fundamental things without putting in the time and the practice. And the same with trading. Like it takes building the repetitions and practice to be able to like easily identify those things so you can execute it well in a live environment. For live trading, it's different. We'll kind of get into that in future weeks with some kind of tips for that. But backtesting specifically, just give yourself some, patience, and understand that it's really common to kind of fudge your first run through of a backtest, including some trades you shouldn't and maybe not fully following the rules. But if you go back through an audit, that's a really good opportunity to kind of clean that up and make sure your data is accurate. So Martin asks, I enter trades in FX to replay backtesting? Yeah, 100%. We're going to be doing live streams once or twice a week going forward, and I'm going to literally show you guys how to place the trades in FX replay for all kinds of different models. And really looking forward to showing you guys why I'm taking these different trades for these different models, and showing you guys kind of how I efficiently backtest myself. So great questions. Let me know if there's anything else about the materials I went over. Just to kind of review, I guess we talked about the kind of key steps for properly, I guess, going through a backtest, from kind of figuring out when you're going to trade, what you're going to trade, do an initial run through, auditing it, optimizing it, and checking with a forward test. The key components, the initial condition, like, what is the first thing I need to look for before the trade happens? I'm not really interested in trading at all until that is present. And then 2, what are you specifically looking for to enter after that initial condition's met? You want to make sure your stop loss and take profit are well defined, and then obviously figure out kind of what the specific parameters are for your model. And also to touch on this, like some models you'll find work great on a certain pair in a certain time frame, but they do not work the same on different pairs and different time frames. And so you really do need to test anytime you want to change up the pair, the time frame, the session, any of these kind of key metrics. You need to backtest and make sure that it also like is profitable for that, for those as well. So let me know in the chat if there's any additional questions, but I did want to take a moment and show you guys the post that Keisha made in events while I'm still sharing my screen. We have created a type form, basically a feedback form for you guys to fill out, what strategies are you interested in seeing backtested during our live streams, what pairs, what time frames, what sessions. Maybe there's a strategy that you saw a YouTuber share, or something you saw on Instagram that you got pretty excited about, or you don't fully understand and you want to see it backtested. Please let me know in this feedback form. You can submit it as many times as you want. If you have different strategies, you can submit several if you have a lot of different strategies, but it would be really helpful for me to get the feedback from you guys, so I know kind of what strategies to test in the live streams, and kind of show things that you guys are actually interested. And we'll kind of go through those together. Obviously, I have some in mind as well, but I really appreciate if you guys take some time after the call and fill out this form to give me some feedback. So with that, I think I don't see any other questions in chat, so we can probably wrap up here. But thanks so much for joining, everyone. It was hopefully really insightful sharing this information with you guys, and I'll be around in the backtesting channel, the trading channel, if you guys have questions about your strategies, about the equity curve, about different ideas you have for stop losses, take profits. Like, let's we can discuss these together in those different chats, and looking forward to running these streams with you guys in the future. So yeah, excited to continue getting to know you guys more and backtesting with you guys. And yeah, hope you guys have a great weekend. I'll catch you guys later. Bye.